Okay, so it is Friday, end of the week, the 13th of May. Oh my, it's the Friday the 13th. Let's see what's going to happen with the markets. So normally, as much as I say it's Friday 13th, doesn't usually have that much of an impact on the markets. But I think that we might be seeing some possibly bigger moves today, because what we've actually been seeing for the week was, dollar getting a lot stronger. We've seen a lot of volatility driven mainly because of what's happening in the crypto markets, what's happening in the equities markets. As we come towards the end of the week, or as we're at the end of the week, I think that we might see some profit taking activity come around, or loss closing activities come around. So I think that, this being the last day of the week, we might see some higher volume, higher activity at this point. So just be extra careful with your trades for today, right? So if you are watching us on YouTube, this is released later onto YouTube. You check out the links, check out the comments below. Make sure you join the club so that you can join this call live as it happens, ask questions on the chat, and interact in the club platform to guide your trading journey, to help you through your trades. With that said, a quick disclaimer again, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself, so please remember to do your own analysis prior to entering any trades. Right, so coming to the news straight up, here on Forex Factory, looking at the news, you can see not a lot of news to be had for today, but we've had a lot of activity in terms of price movement. So just be extra careful there. The main thing, if you have to pay attention to anything for today, will be the US preliminary UOM consumer sentiment. So consumer sentiment is an indication of whether, people like yourselves, retail traders or retailers, are spending money. Are they looking to spend more money? And as they spend money, that's going to drive the economy. So what we're finding here is that it was 65.2. It's expected to be at 64.1. So expected a drop, and this drop is likely because of the inflation that's happening in the US, making things extra expensive now. So consumers might be holding off. They might be holding off, not buying as much, not spending as much, because things are more expensive. So the consumer sentiment, you can see here, has in April jumped up a little bit, but overall has been dropping below below the expected, below the forecasted, and also below the previous. So I think that what we might see, pardon me, what we might see here is that maybe even a 63 number would not be surprising here, right? So if we do see consumer sentiment drop, this could lead to, hang on a second. This could lead to a weakening in the dollar, possibly a short-term weakening, because with consumer sentiment dropping because of inflation, what we might see is the FOMC come out and talk about how they're going to control that inflation, how they're going to bring it down to kind of spur that consumer sentiment back up, to bring inflation down and to spur the consumer sentiment back up. You can see here as well, inflation expectations was 5.4. There's no expectation here, but I think at 5.4, we might see it come out to be about that same level, which is still high, which is still going to be quite high. Some other things to pay attention to as well is yesterday, we didn't have that much news, but we did have unemployment claims for the US climbing slightly with that, and the PPI numbers, at 0.5%. Main thing to pay attention to again is where this line comes up. Chair Powell from the FOMC reiterates half-point hikes. 50 basis point hikes are likely in June and July. So the next two next two FOMC meetings where we could be looking at a 50 basis points increase in the next two meetings. If they do continue talking about this 50 basis points increase, then we are likely to see that dollar strength come back into play as the markets price in a likelihood or a higher likelihood of that increase. As I was telling you, I think yesterday, all that talk about 50 basis points, now my attention is actually shifting slightly towards, are they going to talk about a 75 basis points, right? With inflation and CPI climbing, still climbing, despite the recent 50 basis point increase, are they going to go a little bit more aggressive and do a 75 basis points? So it's something to pay attention to there. But at this point, we're looking at, from Powell, 250 basis points increase in June and July. So what this all means, I'll show it to you shortly onto the dollar index chart. As we are at the end of the week, some things to pay attention to into next week. Let's look into what could happen next week. On Monday night, we do have the UK monetary policy hearings. So at 10:15 p.m., that might, or is quite likely to have some impact on the pound dollar. So pay attention to that. Traders Club members, on our session last night, if you recall, check out the video that I've just posted up. We're talking about possible upside on the pound dollar. So this might be one of the things that could spur it up. On Tuesday morning, we do have the monetary policy meeting minutes from the RBA. I don't think this will be a big price mover because we've already seen what the RBA has done. This is a news after the fact, just to give us a bit more info. So I don't think this would cause the Aussie dollar to jump too much. So, I would read it, but I wouldn't expect to jump into big trades on this. What I would be looking at is on Tuesday night with the core retail sales number and the retail sales number coming from the US, with tonight's consumer sentiment and Tuesday night's retail sales. This might be a bit of a indication. Tonight's news might be a bit of an indication into what we could see on Tuesday night with the retail sales number, and you can see that retail sales number has been dropping. Retail sales number in the US has been dropping. Our expectations are not up yet. Look at it next week. I think we could see it drop further, and if it does drop further, that's going to be, not good news for the US in the short term. Could again spur Chair Powell here on Wednesday morning to, try and push the agenda about the FOMC increasing rates. The big news for next week will be on Wednesday, where we have the pound CPI number. The UK CPI number year on year was 7%, and you can see that it's been climbing. The UK also has been increasing rates. So pay attention. Wednesday will be a pound dollar analysis we'll be doing on the currency call, but your trades could be on the pound dollar with this inflation number to be released, together with the CAD CPI number to be released as well, month on month and year on year. So Wednesday could be a big news day with the pound dollar and the CAD and the US CAD. I'll go through the CAD with you today just to give you a bit of a insight, a bit of a prep into what could happen. And then on Thursday, we do have the Aussie employment numbers. I'll tell you about that next week. And then not much else towards the end of the week next week, right? So you can see that next week is going to have some news, not as news quiet as this week. We're going to have quite a bit more news. I think that there'll be a bit more trading opportunities, especially if markets settle down from the current shock we're seeing now from equities and the cryptocurrencies. So back to the US CAD, the dollar index, and some cryptocurrencies in focus for today. What we could be looking at, the dollar index, right? Dollar index, yesterday when we spoke about this, we were looking for it to break above this 104 level. To break above this 104 level, it broke above during our Traders Club session, when we were looking at this live, they had that big retrace all the way back down to 104.14, and then it closed the H4 candle towards the upside, came as high as 104.80, right now retracing again. So what I would be anticipating on the dollar index for now would be a retrace, a proper retrace. Towards the end of the week, no news happening, possible bad consumer sentiment to be released tonight. What I think we might see, and profit taking from trades reaching multiple year lows, what I think we might see is this dollar index retracing back down. I don't think it will come all the way down. What I think is likely to happen on the dollar index will be to come down towards 104.20, 104.20, and then maybe into next week, we'll see that bounce back up again. So in the meantime, what we might be looking at is short-term counter trend trades, because of this dollar index retracing back down from the very high point of 104.80. Why I say a very high point of 104.80 is because if I went into the weekly time frame and zoomed out, you can see that the last time it broke 104 was in March 2020, or we reached 104 was in March 2020. It came very close in Jan 2017. And if I went further back, you can see that it's been a very long time. It hasn't been broken 104 before. So at a very high level now, expect that volatility, expect that retracement before climbing back up. I think that likelihood for it to climb back up is still very high because of the views the FOMC are indicating, or the actions that the FOMC are indicating. We could see further upside, but still looking for that retrace at this point. So if the dollar index is to retrace, that means the dollar is to weaken. And we have the CAD CPI numbers to be released next week, which could indicate, continued strength or continued growth in inflation numbers for the Canadians. What this could mean is that the dollar is going to weaken, the CAD is going to strengthen, and we've been talking about this last night as well. I'm looking to see whether we're going to see a retrace or correction or retracement in the US CAD. This was where we were looking at it last 12. So this was where we were looking at it last night, looking at it reacting to this 103 level. And we said that, hey, if it traces lower, could we look to sell the US CAD down? At this point, I think it's still a little bit too early to sell the US CAD back down unless you're ready to be a little bit more aggressive, you're ready to take on a little bit more risk, right? So currently US CAD at this 1.3 level, a nice round number. If you were looking to sell down from this point, then you would be, first target would be at 1.29, which would be a 78 pips on 80 pip take profit level. A stop loss above the recent high of 78 pips, you're looking at a 1:1 risk reward ratio towards the downside. This is a counter trend trade towards the downside. Could happen as a counter trend, especially if the dollar continues to retrace from its current point. But for retrace or for counter trend trades, what I would normally suggest or I would be looking for is bigger risk to reward trades, not a 1:1, because counter trend trades are higher risk. So you could even be looking at a take profit of almost a 1:2 risk reward ratio back down towards the 1.2850 level. And then at 1:2 risk reward ratios towards the downside, you can make that decision at 1.29 whether you get to close out the trade or to hold it down to that 1.2850. So counter trend trade idea on the US CAD towards the downside, 1:1 or 1:2 towards the downside. can it go higher? I do think that if you're more risk adverse, then don't look for that counter trend trade. Maybe hold it off, put this on your watch list, and look to see whether we're going to see the USCAD push higher, because we still anticipate the dollar index to retrace and bounce back up. So if it does bounce back up, then we could see that push above this 1.3 level. If it pushes above 1.3, this 1.345 level, 1.3045 level, then what's the upside? Going to the daily time frame, you can see that the next level would be about 1.3160 or 1.3150, about there. So as it happens, it reacted here, bounced off at these points here, and then again very recently in November 2020. So again, if you're looking at the USCAD to move towards the upside, it needs to break above this 1.3049 or 1.3050 level to move towards the 1.3159 or 1.3160 level. So two possible trades here. A bit more risk adverse, look for that trend following to push higher. If you're a little bit more risk taking and want to trade this dollar index for the retrace, then we could see the USCAD counter trend trade from this 1.3045 level. With that said about the USCAD, the focus for this couple of days has been all on cryptocurrencies. I'm not going to go into the other coins, but our usual, we look at Bitcoin. Bitcoin, the last time we spoke about it quite long ago, it was at about that 37,500 level. And since it broke that point, it's been in that downward move, right? So I've added in these yellow lines here. Yesterday it broke below, and then it bounced back up and it set above 27,007 or 27,800 at about the 27,800 level, and it's bounced back up. What I'm anticipating for Bitcoin at this point against the dollar will be for it to continue its retrace back up towards that 32,000 level, and then we will see what happens from there. If it can break above 32,000, then we're likely to see further upside. Move this away. Then we're likely to see further upside only if it breaks above that 32,000 level. But if it fails, then we're going to see that move back down towards 27,800 and possibly lower. This retrace could spur that, and this retrace and fail could spur that move back down quite significantly. So the key level now for Bitcoin against the dollar will be that 32,000 level. Another one to look at is Ethereum. Pretty much the same picture as what happened in Bitcoin. Ethereum hit that 1,900 level and has bounced back up, currently at 2,089, almost 2,090. I think again 2,200 will be that level to see what happens. If it breaks back, then we're going to see it retrace all the way. I think that Bitcoin and Ethereum is a little bit different. It's a little bit different to what's been happening to the other coins. It's just been dragged down because of the overall sentiment, but in the overall view, still looking a lot more stable than those other coins. So just be extra careful with your cryptocurrency trades if you're looking to do short-term trades, or you could be looking at buying into value on the cryptocurrencies. So usually on Friday, I'll talk about, the news for next week, the USCAD, the dollar index, and the cryptocurrencies. But what I'll add on today is the Swiss franc, the US Swiss franc. Very crucially, it's broken, or rather it's reached parity against the dollar. It's been on that big upward move. It's reached parity to the dollar. at 1:1. This by itself is quite interesting, but also because of that relationship between the Swiss franc and the euro, this could give a bit of an indication, a bit of a hint into what could happen on the euro dollar. So just pay attention to how the Swiss franc has been moving. And then if we look at the euro dollar, that move pretty much almost mirrors the way the Swiss franc has been moving. And then what I would say is that for just a quick update on the euro dollar is that right now it's bouncing back up, but if it does break below this 103.50 level, if it does break below 103.50, we could see very big downside on the euro dollar. Right now we're not seeing yet because the dollar index is retracing, but if it does come back into strength and the euro dollar does break below 103.50, we're going to possibly see very big downside to the euro dollar. So just be extra careful with your trades, especially today being the end of the week. I think we're going to see a lot more trading opportunities next week. We'll be doing our currency calls as well, just to guide you through that. So for that, trade well, trade safe, and I'll see you next week. Bye-bye now.